Good morning. It's May the 5th, 2016. Time to kick off another trading day. And probably the biggest news factor today is going to be tomorrow's economic report on unemployment. Non-farm payroll is forecast at 200K. And if such, it would be supportive for equities, for the economy, etc. The ADP number was forecast right around 200,000. It came in at 156. So the market will be wondering if the BLS's number will come in at 156. So that's a question mark. And we've got jobless claims at 262. Pretty much the default figure these days. And natural gas inventories at plus 70, which is about right for this time of the year as they start to rebuild storage. So I'm guessing we're going to have a trading range today. The probably the biggest news internationally yesterday, perhaps it was the day before, were the riots in the Turkish parliament, and that was pretty good. It's, we kind of laugh, but we see those sometimes coming out of Korea, sometimes out of other countries, as the people duke it out for what they feel is right and for what they want, or perceived insults. But Turkey's a member of NATO. They're a very, very important geographically in bottling up Russia. And it's now a country that's really pretty effectively gone to a very, very conservative, fundamental Islamist state. The battle with the Kurds, the PPK, has been going on. Hell, it was going on when I was over there in the 70s. Looks like that's escalating, and they support ISIS. They have been fundamental in selling the oil that ISIS has been stealing from Syria, and they're a partner in NATO, and they want more from NATO, and they're using these refugees as leverage. So it's I don't know what you do with a state like Turkey. There's a lot of bad that comes with the potential good, and right now it looks like there's more bad coming out of Turkey. Several European banks were closed overnight. Probably the biggest news out of Europe was Great Britain's service PMI was well below forecasts. The rest of the world's markets were pretty quiet. Crude oil's up a bunch because of the brush fires and the fires in Canada. It snapped back nicely off the lows. That's countered by another article saying that the United States is headed for 550 million barrels of crude oil stored above ground. So crude oil is not going to break out to the upside unless there's a pretty big war involving the Persian Gulf. I got the feeling that the low's in crude oil, but if we come back down and we can hold that 35 area, give or take a little bit, and stabilize, I think we're going to trade $40 plus or minus until they work off excess inventories. And $40 plus or minus is strategic in Saudi Arabia's current posture. If they can keep it that, they stop shale oil production in the United States. What Saudi Arabia and Russia forget is that there's about 5,000 wells that have already been drilled that are waiting production, and they're figuring out that they can go back in and refrac these wells and open them back up again to increase production. So that will be hanging over the market for a long time. So boil it all together, tomorrow's non-farm payroll news announcement probably gives us a trading range. E-mini hit 2060 overnight, which is where the distribution down started from. It held. It's pulled off. Treasuries had their highs in the Globex session. It's pulled off. So I'm looking for support at 4 to 8. And then basically 28 to the buck. So buy 2 is 29 to 01. Buy 1 is 4 to 8. On the sell side, I'd like to get it done against 16, but we're currently at 9.5, so 12 to 16 is sell 1. 19 to 23 is sell 2. In anticipation of a trading range market given tomorrow's news. Now, if the E-mini breaks down and really makes a big move today, that will change things. But I don't expect much out of the E-mini today either. I put a book review up from Bloomberg on Mervyn King's new book on central banks and what needs to be done to clean up the mess with our banking system that has been probably intensified or increased with recent regulatory action by governments and their central banks. And it's a pretty solid approach. It's a book that's probably worth reading for those of us that trade treasuries. Okay, looking at the 30-year, we've got support at 28 to the buck. That's one. So first buy is going to be 21.25. Don't think we can break the market, followed by 13 to 17 unless the E-mini makes a big move to the upside. On the sell side, resistance really starts at 12. We're currently at 3, so 8 to 12 will be the first area that could hold. And 16 to 20, sell 1. 27 to 31, sell 2. I think there's a greater likelihood of the E-mini breaking down than breaking out and up. So that's the way that that's why I've given a little bit more room to the upside. Gold's still acting funny. I think there's a lot of consolidation going on, a lot of profit taking. You know, where is support? They're still searching it out. We like the buy area, 75 to 80. I don't think that's going to change right now. There is a seller, 85 to 90. And I don't think that's going to change. So here we sit. Put it all together, we're still dealing with a B. And you can see that, and you can see there's a fairly clean break in the 86 area. So 85 to 87 is sell 1. I think we can do better than that, but that's if Nancy were overlooking or wanted me to clean up my acting goal. She said 85 to 87 would be number 1. The first sell would come 89 to 91. So I think 90 is resistance and 80 is support as we start out. 78 to 80, buy 1. And then 76 to 74, buy 2. Don't look for a lot of action out of gold. It usually doesn't do much before the non-farm payroll numbers are released too. When I got up, the euro was under a lot of pressure. It was being sold pretty heavily. Let's see if it's found some support. And it's still getting whacked. And the London split is appropriate because that's the start of the currency market. And what you can see is a B from the preceding day. D until London opens up. They get a new move out of the middle, and M. So 14.25, buy 1, maybe a little bit lower. Buy 2, 114 even. On the sell side, looks like 65.75. Then 90 to the buck for sell 2. Okay, crude oil. Interruptions in supply generally rally the market. And if we interrupt the normal supply coming out of Canada, they shut down those pipelines for a week, 10 days, 2 weeks. It will impact supply, normal supply channels. And right now the uncertainty is how long do the brush fires go? What is the damage to the pipelines, the infrastructure that moves crude oil out of Canada to places south and east? So 45.50 to 75, sell 1. 46 and a quarter, sell 2. On the buy side, 44.75, 44.50, buy 1. 44 even, 44 and a quarter, buy 2. 45 might be the number to buy. It's a round number. So I'm trying to buy on the cheap, may not get it there. 45.50, 45.75 might be a little tight, but that's where resistance is right now. And it looks like it's going to try to trade a little bit higher here, as those that need liquidity to cover their shorts find themselves on the wrong side of the market, and some of them will cover their shorts. Okay, the E-mini likes to revisit the start of moves usually within 24 hours if they hold the second time. In a normal market, it would signal that the selling would continue. Hard to say in this market what goes on because of the manipulation by the central bank. So it looks like we've got a seller 55 to 60, and we got a buyer 45 to 50 as it stands right now. So we'll just kind of keep the buy area broad, 45 to 50 for buy 1. Buy 2, 40 plus or minus. On the sell side, 55 to 60, sell 1. Then 63, 65, sell 2. Basically looking for a trading range. Challenger job cuts, they had 48,000. The layoffs the preceding month, they had 65 this last. So the economy, as far as jobs are concerned, layoffs are concerned, looks worse in April than it did in March. Jobless claims at 262. Natural gas inventories at 70B. Okay, it's going to take a while to get everything up and rolling. I'm going to get busy on that. Looking for a trading range market, really, in all markets today. Don't, because of tomorrow's numbers, and we'll see if that transpires. Back with you in a bit.